Hello and welcome to This Week in Markets. Indian stock markets ended the week higher, but the bigger story was consolidation, strong domestic liquidity, and several important regulatory and corporate developments. The Nifty 50 gained 0.8% to close at 24,570, while the Sensex rose 0.5% to 78,499. The broader market outperformed, with the BSE Mid-Cap Index gaining 1.3% and the Small-Cap Index jumping 2.6%. One of the biggest structural changes this week was the introduction of the Closing Action Ceremony, or CAS, from August 3rd. Under the new system, regular trading in F&O eligible stocks ended 3:15 p.m. Buy and sell orders are then collected during an auction, and the exchange determines a single equilibrium price at which the maximum number of shares can be matched. That becomes the official closing price, replacing the earlier 30-minute volume-weighted average price method. The government's LIC stake sale was another major market event. The two-day OFS saw strong demand, prompting the center to exercise the full green shoe option and sell 6.5% of LIC, making it the largest ever OFS in India's markets. The government raised 31,552 crore rupees, with the final allotment price at 383.69 rupees per share against the floor price of 382 rupees. This was the government's first LIC stake sale since the insurer's 2022 listing. After initially selling 3.5% through the IPO, the latest OFS takes the sender's cumulative dilution to 10%, reducing stake from 96.5 to 90%. Public shareholding now stands at 10%, with LIC required to reach 25% public ownership by May 2032. Another major development came from the RBI's revised upper layer NBFC classification. Tata Sons has been retained in the list, keeping the spotlight on its long-running IPO question. Tata Sons has sought deregistration as an NBFC after clearing its debt, but the RBI says that application is still under examination. The development is particularly significant for Tata Trust, which owns around 66% of Tata Sons. Any eventual listing could have major implications for the trust's ownership and control. For now, Tata Sons remains unlisted, but the IPO question is still very much alive. On the policy front, the RBI kept the repo rate unchanged at 5.25% and retained its neutral stance. However, it raised its FY27 GDP growth forecast to 6.7% and lowered its inflation projection to 5%. The rupee gained 0.2% during the week, while the monsoon picture also improved. The All India rainfall deficit narrowed to 11%, with reservoir levels recovering and FMCG and auto companies continuing to report healthy rural demand. Sectorally, metals gained 3%, capital goods gained 2.9%, auto 2.9%, and IT 2.7%. On the other hand, realty fell 1.7%, while oil and consumer durables also ended low. According to provisional data, FIIs are net buyers of 2,937 crore rupees this week, while DIS bought 7,767 crore rupees. Brent crude fell 8.5% during the week to around $82.5 a barrel, while gold and silver posted strong gains. The Nifty now faces a resistance at 24,700 to 24,750. A decisive breakout could take it towards 25,000 and 25,200. On the downside, 24,400 to 24,350 remains key support zone. Next week, investors will track India's CPI and wholesale price inflation data, US inflation numbers, the final leg of Q1 earnings season, and a busy IPO calendar. That's all from markets this week. I'll see you next week. Until then, stay tuned to Fortune India for all the big news and exclusive updates from the business world.